Good afternoon, traders. This is the 29th of April, and probably one of the nicest trading days I have seen in a long time, and one that yet again proves so much of what I've been emphasizing on and or in my analysis for the last 3 or 4 weeks that I've been sending out these videos, and it continues to prove so much in terms of price and how you should react at extreme areas. And I'm gonna just look. I'm on early today because this day is done for me. I don't even care what they do from here, uh, but it's just truly amazing how you know all of this run up was nothing more than the prep into the president's speech last night, and you probably can look over the history of every speech a president has made in their term, and I pretty guarantee you that the majority of them had bullish reactions in the market. They always mark it up, and this one, it is what it is. I mean, this is a perfect example of just what are we doing up here, and really, how are you going to get? I mean, this is a setup in the greatest way I could possibly imagine, guys. This is exactly what you don't get caught up into, and this is how you take advantage of price extremes. Okay, and look how where this thing opened up. A contract high, 40 got all the way up to almost a 42.12. Okay, I mean anybody looking up in here to get long is just asking to just get run over. Okay, there is, what do you gain by taking longs up at these areas? All right, unless of course they prove it to you, and they absolutely did the exact opposite. And that's what I always expect, and this is what I talk about: extreme reversal trading. And right here, every yellow box that you see on my chart are entries that I made, and I basically just parked because I knew that this thing was going to roll. They were going to give back most of it, if not all of it. And I mean, my goodness, they did it in a matter of 2 hours. Actually, they did it sooner, but you can see all this congestion right off the opening bell. They rammed them up right into the opening. I mean, this is such a setup. I've how many times you can see this before play out. You've seen it play out on the downside where the market opens up lower and jams down to a significant support level, tries to get everybody in, and just reverses this exact opposite to the upside. Gap, super high gap higher. These are reversal shorts. This is an R2. They chopped around and they finally confirmed to the downside right there at about, I don't even know, it came in a little just before 9 o'clock, which is always a key moment in the market. I've talked about that in all my videos. Always be patient, wait for the hard move at 9 o'clock, and just take a look at the extent of this particular short area to area. And then you need to see how they react at the next level. And you can see they tried and they failed. They couldn't continue. Another short popped in right here. Okay, area to area. And now you start getting into that area where what's left besides the gap fill, which I believe was around 77, and it fell a little short. But they still gave you a nice reversal long right here because you're still, they're still going to bounce. You're talking 30, 40 handles. It's going to bounce. And they made one last run and they double topped at R1, I'm sorry, and another short area to area, short to area. And what do you know? Another failure right here. And this was kind of the puke to me because this location down in here, this was the rest of your gap fill right here, by the way. And now you come down to where all the support has been all week. Okay? And it's S1 now. You went from R3 to S1 in 2 hours. That is a huge move. And you can see this was an opportunity. I took this long down in here and I parked and I got out of my last at the pivot. I'm done for the day. And take a look at this because I did this last night before I even got on. I popped on all these, and I always mark my trend lines with a solid red, the ones that are the most significant. And you can see where this one's coming in right here. And I talked about this yesterday, okay? Because this number is going to be giant, and this is coming in around 64. Okay, that's your 9MA. We start challenging that number, we could start taking money off the top. But until then, this is just trying to roll back into a digestive trade and maybe rebuild back up. So we're going to see how the rest of this day unfolds and whether they can hold on. They gave it all back, and now we're back to where it all started, okay, and how we played out all week. So you're going to want to pay attention to the pivot and how well we hold it. You can see right here, look at this long trend line. We finally broke it with this final turn from S1, another key location coming off support that you've had all week. This is just all about, as a trader, recognizing the patterns. Where have they stopped all week? Why have they stopped there? Okay, okay, because over and over it's the furthest extent on the downside before they can break the camel's back, and they haven't done that yet. And I even showed this to you as well, the Dow. Okay, I showed you how this was an issue. Yeah, they gapped higher, but look at the difference here. The Dow, let me get rid of this. The Dow has a contract high of 34,144. We opened up 30 handles higher, made a new contract high, and the Dow, look at all the Dow good. The Dow barely got back up in the futures to 33.9, and they rolled. And then they basically came right back down, and they broke that 33.7 area, which they just bounced off of. In fact, they made a new low, which was actually a double, triple bottom. I didn't even see this, but look at this 620, three bottoms down there. All right, and this is just above. So, we're going to have to see how this market handles 724, which they just blew through like nobody's business. That was a huge bounce. So, in fact, look at here. You can see it. Let me see if I can pull down the. Here's the. Look at this 15-minute chart right here. Look at that. It is double top up in the morning, just a little bit shy of 38, 33.9, and lo and behold, in fact, this is the 33. It's this 791 is that man of 15. You can see they basically got over the lower one at 33.730, which was where I just showed you this MA right there. Okay, so you can see how this all plays out with price and how the market reacts to it. And it's good to pay attention to the Dow as well because it's going to give you a pretty good idea where the futures or the S&P futures are going to go. And this is how you trade from the locations, guys. It's really that simple. Extreme trading, paying attention to price reaction at the extremes. All right, let's forget you're still in a bull trend, and this is just a corrective uh, session that basically gapped higher. We should have no right to be up there. I don't know if we're going to go back up there, if possible. I mean, impress me if we did, but let them prove it. At the end of the day, when you're way up there at a gap higher, you have to think about what are your probabilities of success on long trades in a market that just gapped. There weren't any. There was not one. There wasn't a buying opportunity until we got to the pivot. Okay, and that was a good 25, 30 handles from the high they made. And now we're back in to a digestive trade that bounced off the lows that's been in place all week. And on top of it, it's S1. It's exactly what I'm trying to preach to all you traders, area to area. So once again, the proof is in the charts, guys. I couldn't make this up. So I hope you guys are doing well. I'm done for the day. You guys want to talk about all of this, see how well this fits into how you trade, whether or not you like this particular strategy to incorporate in your trading. Reach out. I'll be glad to talk to you about it. Otherwise, have a great day, guys. Good luck for the afternoon.